Gas prices had already hit an all-time high before President Biden announced the U.S. would ban oil imports from Russia. So what could that mean for our economy and Russia's war on Ukraine? Joining us now is Helima Croft, Managing Director and Global Head of Commodity Strategy at RBC Capital Markets. Good morning, Helima. How are you doing?
Good morning.
Now, we need to know how important the Russian oil is to the U.S. and U.S. energy market to Russia. Can you kind of shed some light on that?
Sure. I mean, Russia is not a major exporter to the United States. We basically get less than 4% of our oil from Russia. It is hugely important, though, to countries like Germany. Germany takes 34% of their oil from Russia. 32% of their gas comes from Russia. 50% of their coal comes from Russia. So a country like Germany is uniquely dependent on Russian commodities. But what the United States has done is essentially signaled that sanctions pressure is going to grow on Russia. And so that is creating anxiety that we're going to lose additional Russian exports. Russia is one of the world's largest oil and gas exporters. And what we're seeing right now, I'm in Houston at the moment, is we're seeing major oil and gas companies, Western companies, saying, we're not going to do business with Russia. They're cutting their ties with the country. Shipping firms will not take Russian crude. Banks will not finance the trade in Russian commodities. And so you have a situation right now where we're seeing Russian exports fall dramatically because of a self-sanctioning process. We're potentially set to lose 3 to 4 million barrels of Russian oil exports because energy companies are saying we do not want to run the reputational risk of doing business with Russia and funding Vladimir Putin's war machine.
Helima, we are already seeing gas prices rising. We know that will continue, and the president has said he will try to counter. How can the U.S. counter that, and how quickly might people see that impact at the pump?
I mean, the concern really is, if this war gets worse, if we have a prolonged conflict, we have to prepare ourselves for this higher price environment for gasoline. The question is, will we see further reductions in Russian oil exports that would put more pressure on prices? Now, one thing that the Biden administration is trying to do is get additional oil on the market. So pay very close attention to what is happening with countries like Venezuela. The White House sent a delegation to Venezuela over the weekend. There's talk that sanctions on Venezuela could be lifted. And if Venezuelan barrels start coming to the United States, that is a potential replacement for Russian barrels. But again, the volume that we're talking about from Russia potentially coming off this market, it's going to be very difficult to fill that in the near term. Saudi Arabia does sit on additional barrels. The question is, can we get the Saudis to put more barrels on the market? And there's always a question about what about the U.S. oil and gas industry? The U.S. is a major, as everyone knows, oil and gas producer. U.S. is going to grow this year. But if we want to see larger and larger volumes out of U.S. producers, it's going to take time. Putting drills to work means you get additional oil in 6 months. And that's why there is this real concern about this near-term price pressure.
Well, President Biden says he wants to ease the pain for consumers. That could take up to 6 months. So we'll see how the next coming weeks and months follow out. Thank you, Helima. We appreciate you.